Hello everyone, my name is Matthew Frailey with BreakpointTrades.com. We are master technical traders. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical systems like our SPY system here. We've been doing this since 2003 for individual traders and professional institutions. Anyway guys, it's been about a week and a half or so since I did a YouTube video analysis on the market. Been busy with keeping our subscribers abreast of the market, as you could imagine. And by the way, if you haven't done so, consider subscribing to Breakpoint Trades, or at least sign up for our free newsletter. You'll find that right on the homepage. So anyway, market's been doing a lot of things, so let's get right to it. So first off, this is a technical review of the markets and I'm recording this on Thursday morning, December 16th, 2021. As you know, on Wednesday, we had the FOMC, and we had the typical volatility going into that. I'll get to that in a second. But anyway, this is, again, a technical review of the markets. I'm recording this on Thursday morning. This is the table of contents here. We're first going to look at the general market, the major indexes, S&P, the triple Qs, IWM small caps. We'll look at a few indicators, not too many. We'll look at bonds. We'll look at a few major sectors, some commodities, and follow up on a few trade ideas. And I did add a few new ones. But realize, guys, in this environment, there's been a lot of broken charts. And so I'm not going to add a ton of setups here. You know, we had a strong reversal in the market today following the FOMC. And if this is truly the Santa Claus rally, then probably, you know, most things are just going to go up, right? I don't think you have to be that picky, but I did add some trade setups. So as you know, market's been coming into the day has been quite weak. There's been a lot of volatility. There's been a lot of fear out there, and for good reason. Today, the market came in. It sold off once again, and it almost tested yesterday's lows, the S&P. In fact, the IWM small caps made a new low, and I'll show that when we get to that chart. The S&P today was down about 24 points. It bottomed around 11:30 Eastern Standard Time, rallied a little bit into the FOMC. Then following the FOMC, we had a strong rally into the close, with the S&P closing up 76 points. And really about a 100-point reversal off the intraday low. Like I said, IWM small caps made a slight new low and then reversed. They formed what could be a divergent low. We need to see follow through on all these things. Clearly, the market reacted to the FOMC. Initially, the very first few minutes, it pulled back. Then it quickly reversed. If you read the FOMC statement, which I'm not going to do here tonight, I had that in my newsletter for our subscribers. It was actually fairly dovish. Obviously, they talked about the taper and all that jazz, but there was quite a bit of dovish things in there, and that's probably what the market liked. So anyway, let's go ahead and get started with everything here. So first off, this image here, one of our members on the trading community blog, it's our active community during the day, posted this, Blink. Now, by the end of the day, Blink, this candle had changed quite a bit. There's a nice doji hammer type candlestick, but he drew up this Christmas tree, and we've been talking about that. And actually, you've probably heard about that on CNBC a little bit, but you know, under the surface of the market indexes, there's been a lot of these Christmas trees. You know, these stocks that have went way up and come all the way down. Remember, guys, the indexes are masked by some of these very heavily weighted stocks, particularly on the triple Qs. 8 stocks control 52% of the movement. You know, Apple, Microsoft, things like that. And so the indexes have masked the damage under the surface. And what we've seen is a lot of these Christmas tree patterns. There's a lot of stocks out there that are down 20, 30, 40, 50% that wouldn't be obvious by just looking at the indexes. All right. Now the Russell's taken it on the chin a lot more. It's a much broader index, but you know, that's part of the issue with the markets that we've had, the negative breath, etc. And we've also seen a lot of these Christmas tree patterns on a lot of these high growth stocks that really don't, have good earnings, or they just have high sales, but they either have very high PEs or no PE at all. So we've been seeing a shift away from growth back to value, and I think that will continue in 2021. But anyway, this was a cool pattern one of our members drew, I thought. Anyway, going to this index sector table, what transpired on Wednesday. You can see nice day for the major indexes. The NASDAQ tech area led. Still down for the week. Now, following the FOMC, sometimes you get a reversal or a market has a change of heart the next day. So for me, Thursday's trading action is going to be important. I would like to see follow through. Okay, so if we can have a nice follow through on Thursday, I think that would be a nice positive sign for at least our Santa Claus rally. And also remember that Friday's options expiration. Here's the action on the major sectors today. We followed 21 of the sectors. Only 3 of them were down. Still pretty big losses for some of these for the week. US dollar down a tad. Cryptos have been selling off lately, but they closed up here nicely today. I'll show those briefly when we get to the charts below. Commodities are kind of a mixed action. A lot of weakness in the ags here recently. I mean, small rallies here on the crude oil. Natural gas up 1.5%. Precious metals, gold has been fairly weak lately, as is the stocks. And there's the action on the bonds. Typical. High yield corporate up with the market. TLT down as the market rallied. Moving on to the index chart. So here's the daily snapshot of the 5 key major indexes. So again, we formed that low in late November, early December. As you know, the market had a rare instance where it was down on Thanksgiving week. All right, so we've had that nice correction from mid-November on the Dow to late November on the other indexes. We formed that low there, we rallied, and then we pulled back pretty strongly. You can see today's action, the nice rally. So again, we want to see follow through now. You can see the this flag action on the S&P and Dow. Here's the NASDAQ. And of course, the Russell at the very bottom. You can see how it made that brief new low. By the way, guys, our SPY reversion to mean systems kicked butt during this correction. I'll show you those briefly here. There you go. So this shows you our SPY Pro system, our SPY reversion to mean system. What it is the collection of 22 individual systems. And so you can see here, this is one of the subsystems, the trend pullback. You can see it had 2 entries. Took 2 entries on that pullback in November. Nice trade. What these reversion to mean systems do is they don't try to stay in the market all the time. They see a trade opportunity, they get in and get out. And that's their job. And you can see I have 2 versions of this. Here's a different subsystem. It's our CCI oversold system. It has something like 98% winning trades. Now, it sold a bit early, but hey, it's a winning trade. And here's the long subsystems. I have 12 of them. I'll do a separate video on this SPY systems sometime in the future, but very popular with the website. Most of these systems have 90+% winning trades, and the history spans 25+ years. Again, they haven't been around that long, obviously, but that's where I have stats going back to. So they did a great job buying that pullback in the market for a nice trade. Again, I'll cover those separately in a future video. But again, now we'll see if we can get a follow through tomorrow. Okay, let's move on. Let's move to the S&P 500 chart. So here's the S&P daily. See this uptrend channel. Again, we formed that divergent high there in November, just before the Thanksgiving. Remember one of my videos, I discussed how don't expect don't automatically just expect Thanksgiving to be an up week, and that ended up proving out to be the case. You can go back to one of my listen to one of my prior videos that I posted before Thanksgiving. I talked about that, and that played out. But we had a nice divergent high there. You can see the MACD, the RSI divergence, all that played out. Quick pullback, little slide under the cut of the 50-day moving average. Then we recovered. We were pulling back here pretty good. This pullback, by the way, didn't get back to the 50. It was about a 50% retracement of this, which I'll show in a minute. But nice move today. Here I added a trend line resistance. Remember I said I wanted to see follow through on Thursday. So I'd like to see is a follow through rally that closes above this candle. That would be a very positive sign for follow through into the Santa Claus type thing. Now, I do think going forward though, especially after the end of this year, we're going to have to keep a strong eye on these breadth charts, and I'll discuss that later below. Next. Here's a 2-hour chart of the S&P. There was this open gap, which was kind of a magnet. It didn't quite fill it, but it got well into this gap here. And, of course, you could see what happened after the FOMC. Big move here. Slightly piercing this little downtrend line. Like I said, I want to see follow through. Now, let me show you an educational item, guys. Very powerful trade tool. So this stochastic here, everyone knows the normal 10 or 14 stochastic. So what I also use is a 60 link stochastic. So it's about 6 times longer than this. And I find it's a very useful trending type indicator. When it's this 50% area in particular tends to be very important, okay? For when you're uptrending, it'll become support. So what had happened after this correction pullback in November into early December here, then the rally, the 60 stochastic went above 50% here, then it pulled back, and notice how it kissed that perfectly found support there. And that happened to be around this gap. There was also a 50% fib area. But guys, whenever the 60 stochastic goes above here and pulls back, always watch that area for potential major reversal. Okay, I've been using this setting for many years. It's very powerful. Again, that's another educational video I need to do sometime. All right. Next, here's a 60-minute chart. You could also see this 60 stochastic. By the way, here's a great example of back in November when it fell below the 50%. And in every rally, it stalled under the 50%. Then, of course, when it broke above it here, it then became support here. Now, some other educational things here is Symmetry. And by the way, I'm going to be doing an educational video on Symmetry by the weekend. That'll blow your mind. That's an amazing indicator. So one thing we were discussing on this correction in November and into early December was Symmetry. These rally attempts were very symmetrical. They were around 90 points, okay? And right here, we had a rally larger than 90 points. That was a break in Symmetry. When you see a break in Symmetry, that tells you with high odds that that initial trend is over. You can buy the break in Symmetry. But then it also tells you to be on the lookout for a higher low, which, lo and behold, we got right here, which happened to be around this 50% fib, almost filling that gap. And then, of course, we had the FOMC today. And remember, we had the 60 stochastic right around that area. So with the Symmetry break, with the 50% fib, the 60 stochastic, everything was set up there for a decent bounce. So one could have went long here with a tight stop. And, of course, today was a nice move. And just to give you a little taste, let me pull up this Symmetry doc that I made. If you'd like, you could pause it and read this. Again, I'm going to cover this in more detail, but Symmetry, what I've noticed is I think it's one of the, kind of like in physics where you have the fundamental forces, laws of nature. I think Symmetry is one of them because it works on any time frame. It's a very powerful tool. It can be used on any time frame and any instrument and any market. Okay, it's kind of what you do is you note the start of your respective trend. If it's an uptrend, you note the depth of your pullbacks, and when you have a pullback larger than your recent pullbacks, that represents a break in symmetry. You'll form a lower high with high odds. Same for here, a downtrend. And again, I'll show some examples and uses of it, but it's a very powerful indicator. Also remember, guys, while it's a very powerful indicator, there is no holy grail system or indicator, but I do think it's a very powerful tool. But let's go ahead and get back to that. So here's a 15-minute chart of the S&P. Again, just covering the same things. We had that symmetry break here. That was bullish. We had this big gap. We almost filled the gap here, didn't quite fill it. Then you had a little symmetry break here late in the day, and that was bullish, and then we pushed up. By the way, right here on this early in the week and last week, you had this sideways movement where you formed sort of a little rounded top here. But during this, notice the symmetry. You broke symmetry here. That set up your lower high than here. Here's a 5-minute view, shows you the action the last couple days. So one thing I like to point out to our subscribers is the symmetry, even intraday. Like, you know, back here on the previous day, we had a symmetry break, which was bullish. We had that end of day rally. And then today I used it to project this low. Then we had a symmetry break right here. You can see on the FOMC what happened initially. We had a quick move down here. Boy, that was a buy opportunity. But if you missed this, we broke symmetry there from an intraday basis. So you had an opportunity to at least buy this higher low pullback. But nice move today. You could see moving average ribbon's a great guide as well. Moving on to the KISS system. So here's the daily S&P KISS. This went back long last week here on that symmetry break that I showed on the 60-minute and 2-hour charts. Rallied up. The wide stop there was the 44.95 DVT. With today's move, I would move a stop up at this point. Again, this is our trending type system. Remember, the SPY systems themselves, those are reversion to mean, but this is more of the trend following. Here's the various cycle time frames. So far this cycle support has worked out nice for a buy. Also, on the 120-minute, we had the buy cycle show up yesterday, and along with the DeMark 9 and that 60 stochastic around the 50% area, that ended up being a pretty good signal. Everything lined up there for a bounce, which we got. It was tough to buy, I won't lie, with all the negativity and everything else. In the markets, when emotions are high, things are tough like that. Moving on to the triple Qs. Again, you can see today's nice rally recovery. You can notice it tagged this uptrend line that we drew the other day. Basically, almost tagged Tuesday's lows. Big move up. Again, like I said, you want to see follow through. I'd like to see a close above this downtrend line. Notice your moving average ribbon is bullishly stacked. It's pinching here, so energy is pent up. So let's see if we can get a follow through move tomorrow on Thursday. Here's the 2-hour time frame. We did slightly break a trend line here, but I want to see more than that. And here I added a little symmetry target to monitor. Here's moving to the KISS chart. No changes here really. The trending went long back about a week ago. DVT is still pretty wide there at 383. Here's the various cycle time frames. One thing I talked about today is, you know, at those lows, we had a lot of these. Notice all these 9s. That's the DeMark sequence. So we had all these DeMark 9 sequence near these recent lows. Lo and behold, we bounced. So things were pretty stretched there. Moving to the small caps, IWM. They've been the weakest, as you know. They had this breakout here in late October. Didn't go very far, got very overbought here. We expected a pullback, but It didn't find support here, cratered down. Got some capitulation volume here. You can see it. Rallied up, lower high, pulled back. We formed a slight new low on Wednesday. And we do have some RSI divergence as well as little MACD and stochastic divergence, which I didn't draw in there, and some CCI divergence. We are still below the 9 EMA, so I'd like to see a close below that, above that for the bulls. Here's a 15-minute chart. I noted today we had a symmetry break right on the FOMC, so that was a positive. Whenever I have a symmetry break like this, I just go ahead and buy. Here's a 60-minute time frame. So essentially on the Russell, even though it did slightly undercut this low back here, to me it was more of a double bottom. All right. By the way, here's noting, remember my symmetry explanation. We're in a downtrend. Monitor the rallies, and once you get a rally that breaks the previous rally attempts, that's positive. Look for a higher low. So on IWM here, you can see the correction started back here in November. These were your largest rally attempts, and you basically broke your symmetry here. Now, it wasn't much. You didn't really get a higher low. Sometimes when you break a symmetry, and if the market's weak enough, you'll make more of a double bottom, and that's more what this looks like. But either way, if one was long to Russell, there's no reason to give a stop any wider than this recent low. In fact, you could have it much tighter than that. All right, moving on, guys. One thing we're going to need to monitor going forward is the breadth. So what gave me pause in the market in November before Thanksgiving was this severe negative breadth. So we had the new 52-week highs was declining, all right? But the big warning was the new 52-week lows was spiking like crazy when the NASDAQ was at new all-time highs. And this indicator here is the difference between the 52-week highs and the lows. So this was screaming warning sign. So then, of course, we got the sell-off into early December, bounce up. But the one thing that hasn't healed yet, and even with today's rally, what's a little concerning is this new lows is spiked still. All right, so there's still a lot of damage under the surface. The difference here too, notice how this is negative. We got to keep an eye on this because the NASDAQ goes back up. Let's say it makes a new high or just get back up in this range. We have some sort of Santa Claus rally. We want to keep an eye on this, guys. This is going to be very important going forward and going forward into 2022. If this cannot get back above zero and stay, we could be looking at some real trouble in 2022. So let's keep an eye on this. Here's the weekly view. This is something I discussed with my subscribers a week ago or so. The new 52-week highs minus lows. And you can see how strongly negative it is here. And the reason why we want to keep an eye on this is because, you know, here's an example in 2008. And I'm not comparing the markets to 2008, right? All right, guys. But what I'm showing here is that, you know, in 2007, you had the 52-week highs minus lows go negative back here. We had another rally. It went slightly back positive. Then it fell, went negative. And you can see on this rally, it formed a lower high. It never went back above zero. So that's why, and then, you know, then you went into 2008, and we all know what happened in 2008. So that's why going forward, the bulls need to get this back above zero. It needs to get back above zero and stay there. Otherwise, we could have some real problems. So again, what that tells you is what we all know about the negative breadth. You know, just a handful of stocks been holding the market up and all this damage below. So let's keep an eye on this going forward, guys. All right, moving on. J&K High Yield Corporate. Nice rally today. That usually moves with the market. Not surprising. TLT 20-year bonds, little pullback. Next, here's the yield curve. The yield curve is the 10-year divided by the 2-year. There's been some talk about that on CNBC recently. Now, it's not anywhere close to going negative yet. You have an inverted yield curve. You'll have an inverted yield curve when this falls below this ratio of 1. All right, so that's still a ways away. But there's one thing that stands out to me. This has had quite a pullback in the ratio just this year. It was up at 13. Now it's down at 213. So that's quite a quick move down. So what it tells me is that we definitely have seen a slowing in the economy. And there's still quite a bit of room here, but remember, this is also a logarithmic chart. So this distance here, while it looks wide, remember, this is a log chart. So it's closer than you think. But again, it's still not close to being inverted. But this is something I'm going to keep an eye on going forward. And if it starts getting way down in here, obviously, I'll let you guys know. Moving on, look at some market sectors. Real estate's been holding up well. I pointed that out 2 weeks ago, and that's held up very well, as you can see. It never really even got phased on this last pullback. It obviously hit pullback here in November, but not recently. Last week, I pointed out the consumer staples as a breakout play, and money's obviously continued to rotate into there even today. Now, remember, I talked about the flight to value. So obviously money flowed in here for safety, but also value. These companies have value. And remember, a lot of money's been coming out of those crazy growth names, the Pelotons, the Snaps, the Stitch Fix, stuff like that. Financials, they still haven't done much. They're in this coil pattern, so keep an eye on this. Semiconductors, they had a big reversal today. Notice there's a coil here. Communications sector contains a lot of these FANG type stocks. They rallied off that support back here. Higher low so far, but it's got to break above the 20-day. This resistance, 200-day, 50-day. So a lot of resistance, but the first point we want to see it break is the 20-day. Biotech had a nice reversal. Now, biotech's been one of probably the weakest sector for the year. Back here to $175 in February. Fell all the way to the low 100s. And remember, that's an ETF. So biotech is really taking on the chin. But, the last couple days and today was, I think, another buy opportunity for it. I already was long some. I added to my position today. I like the reversal. Let's take a look at the 60-minute chart. So the 60-minute chart, you can see this steady decline here. You can see your moving average ribbon. It's very useful. Here's your Symmetry rallies. Boom. And you broke Symmetry basically right here. Right here on this candle is where you broke Symmetry. Then we rallied higher. And we basically came down to a double bottom. So you had essential double bottom here. If you saw this the other day, that was an easy long with a tight stop. And then today, nice move. So this looks poised for potential follow through. Commodities, we'll just look at a few of them. Here's DBC. That's represents the broad-based commodities. Slight update today. Like I said, there's kind of a mixed bag for commodities. No real changes in this pattern that I've been shown. That's your resistance. We'll see if it can form a higher low here or not. Crude oil, like I said, just a slight update. It has a similar look. It rallied off this support a couple weeks back. Natural gas still struggling here at the 200-day and the 50-day. The question is it going to pull back? This is a bear flag. Is it going to pull back to this area or not? We'll see. We have natural gas inventories on Thursday. Copper. We showed this consolidation recently starting to break down from that. It's been very choppy as of late. Lumber, I haven't talked about lumber for a while. Boy, lumber's had a heck of a move. So lumber, if you go back and look at some of my videos back here, I talked about lumber in this fifth wave divergent low back in August. And it's steadily formed higher lows since. Coil here provided a nice long. Then you had a trend line break here. I talked about that back in November. And it's up about 35% from there. Unfortunately, not easy to play this. There's no ETF. Futures are the way to play it. I actually played it once. Most people can't do it. The margins are extremely high, something like 60 to 70,000 overnight margin you need for the lumber futures. You know, I wish I bought it back here and held it because that's a heck of a move. But you can see the moving average ribbon, educational point. When they're all pinched in like this, that's when you're set up for your big moves. Energy's bent up, and nice move. Uranium's had a nice correction from that rising wedge. As you know, long term it's in a bull market. I'm not going to show those longer term charts tonight, but basically finally tagged its 200-day moving average today. Volume picked up. MACD still hasn't crossed yet, but seems like a low risk long here at the stop. We'll see if we get follow through. Bitcoin's had quite the correction from this early November high. We pointed out that MACD divergence back then, you know, and nice steady correction. Broke this trend line, which became resistance, and bounced off the 200-day moving average the last couple of days. We'll see if we can get follow through or not. Keep an eye on the MACD. It's curling up here. It's trying to cross. That would be a positive. Here's Ethereum. It's back above 4,000. Had a brief dip. The bullish view is you had another ABC correction here, but obviously we need to see follow through. I want to see it close above this 9 EMA, etc. The cryptos following stocks, Mara. It's one of the top ones. I think they mined Bitcoin for around $7,000 a coin. It's obviously had a hell of a correction from back here. Hope anyone was long took your profits, didn't ride it all the way down. And in fact, we had it as a short bet right in here. But it's trying to bounce a bit here at the 200-day. Still got a lot of resistance. You know, could you have a long here at the stop at today's lows? That would be one way to play it. One that I'm interested in is Rhodium. Should have an IPO soon. Apparently, they can mine Bitcoin from around $1,200 a coin. So quite a bit better than Mara. I'm not sure when they're going to go IPO. I'm keeping an eye on that. Moving on to some of these. Here's Apple. Apple, as you know, has been the epitome. Amazing move out of this coil. And that pullback just recently found support at the 9 EMA. You know, Apple holds up the entire market, you know. Again, guys, it is what it is. But even with Apple, don't ever get complacent. Always just still practice your general technical analysis, your stops on your time frame that fits for you. All right. But obviously still uptrending. Google found support here. Could have been a short if it lost this. In fact, if it were reversed down, it would be a short idea. But it's the coil. It can go either way. You know, we'll see which way it breaks. Tesla. I hope you guys who sold your Tesla on this lower high bounce, I was counting that as a wave B, and that proved very good all the way down to here. Unfortunately, it still has not filled this gap. That's been one of my targets, this 910 area. We didn't quite fill it. We got around 9, what was our low today, 928. Doesn't mean it won't fill it eventually, but you know, this rally up here was either an area to sell longs or take an aggressive short. This is obviously big support area down in here. AMD bounced at the 50-day moving average the other day. Big rally today. That's one of my favorite tech stocks. GNRC was an idea I pointed to our subscribers today. Doji candlestick. Very oversold. RSI divergence. CCI divergence. Whenever you have I call it the CCI bungee. Whenever you have the CCI falls below -200 and has a positive divergence. Especially if you have a doji indicator like this, you could have a tight buy stop 1 penny above the doji, sell stop 1 penny below. Your initial target's the 9 EMA. Seemed like a lower risk trade. My initial target again is that 9 EMA there. Gilead's been on a watch list since last week in this coil. It's moved up steadily higher. Pfizer, what can I say? You know, this was also on our list on Monday. Look at that move. They have the market cornered, don't they? Can't sue them, you know. So, you know, hey, it is what it is, guys. Philip Morris, I mentioned the other day that it goes ex-dividend, I think on the 22nd for the quarterly dividend. So it's moved up a little bit from there. And 50-day moving average initial resistance. TMUS has been a low risk long on our list as well. It's been moving up. Moving average ribbon is trying to break through, but hasn't totally done so yet. IONQ, this is a they're into quantum computing, so they've had quite the correction here. Kind of a little aggressive falling wedge here. First day up, decent volume. It looked poised for maybe follow through. Visa, they announced the stock buyback in after hours on Wednesday. Bounced off its 9 EMA. You know, has a flag look. So this one potentially poised to move higher. It's had a nice correction, obviously, and that stock buyback will help provide, you know, liquidity. Nile is an interesting one, low-priced one. Could put a stop at today's lows. Their company announced a $50 million buyback for this little stock, so that will provide some potential. That'll provide support under the surface. They deal in some kind of Bitcoin type crypto stuff. There's this 60-minute chart. Blue, I think this could bounce if it breaks through this resistance. Again, guys, as far as ideas, like I said, a lot of charts are broken under the surface. So, you know, if we are in a Santa Claus rally, most things will probably rally. So, you know, my suggestion is to focus on a few things, or, you know, some names that you might hold. Focus on managing those. There's JP Morgan, still potential short if it were to lose this area. Could also be a long here at the tight stop. And that'll do it. So again, we'll see what happens, what the market does on Thursday and of course Friday. And like I said, happy holidays, Merry Christmas to everyone. I know you're not allowed to say that in this politically correct world, but Merry Christmas. Again, I'm going to be doing an educational video shortly on the Symmetry and other things. Again, take care, everyone, and see you next time.